Time for another special chat on ET Now. This one, the guest on my show today is Nirmal Jain, Chairman of the India Infoline Group. Today he is joining me from the sideline of the annual investment conference which they are hosting in Mumbai, and the theme of the conference this time around is Finding Alpha. Nirmal, thank you very much for your time. Tell us, how was the day one of the conference, and this time the theme which you have chosen is clearly an issue many money managers are actually grappling with, finding alpha, because the market is very polarized.
Yeah, actually, what you said is absolutely right. That maybe let me talk about the theme first, and then we can talk about day one. So, in fact, in last maybe couple of years, what we are seeing is just about 10-15 stocks have been performing, and rest of the market has underperformed. And as a result, there are many funds underperform the benchmark indices like Nifty. And this has been a bit unusual for Indian markets, because if you look at last 25 years track record, then most of the funds found it very easy to beat indices, and they could always find mid-cap and small-cap stories that could outperform, and they could avoid a few large-cap names in indices and replace that weight with some mid-cap names that they're comfortable with. But that has changed, and not only domestic fund managers, but even foreign fund managers have found it difficult to beat indices, and most of the activity has been concentrated around 10-12 stocks, and even their valuations have gone significantly higher. So, on one hand, if you see that most of the fund managers became very cautious about India, and they started developing negative outlook, because they think that on the economic growth is slowing down. How can valuations be so high? But the problem there is that you are looking at valuation of a very small universe of stocks, and you are looking at the economy with the rear view mirror. So, the theme this time is that we get a larger, almost 120 companies come to our conference. We have invited this time, and they are all represented by either their CEOs or some very senior person in the company. So fund managers can actually expand their in terms of the investment universe to a larger number of companies, try and find good values and find alpha which has been missing. So that's the theme of the conference, and which has been very well appreciated. Of course, it is not easy to find alpha. I mean, obviously it's easier said than done, but at least you can start your effort, and you can look at the opportunities not in just 10 stocks, but in a wider universe. And given the way Indian economy and the country is, although the last few quarters have been a little weak in terms of growth, but things will look up, and they are looking up. There are already green shoots, and there'll be a lot of opportunities. So that is what most of the fund managers are looking at. And coming to day one, the coronavirus impacted, but there have been very few cancellations. Still, we have about 600 fund managers participating from all over the world. A few people from Asia, Hong Kong, Singapore canceled their trips. Some of them have come today. But I think the conference on day one went off very well. So we had Jim Walker connecting on video link, but we had Professor Arvind Sahai talking about neuroscience. We also had this Book My Show promoter, and then quite a few specialist speakers on day one. And the evening we also had a spiritual talk by this Gaur Gopaldas Swami, and I think that was also very well received. So conference has been going on pretty well. And this time, despite high valuations of the broader market, interest in India is very, very strong. One more thing we should note, understand and note is that this coronavirus has impacted China, and our solidarity with the people, and maybe this should recover very quickly. But from the investment world point of view, I think many investors would look for alternatives, and China has been destination for large capital, but India will emerge as a strong alternative in next few quarters, that is for sure.
Nirmal, I wanted to know your thoughts on the valuations of the market, both the broader markets as well as the large to mega cap end of the section, which is giving a lot of comfort to many money managers, and hence you saw flows in that direction last couple of months.
The valuations are steep in cases where the stocks are very well known and very well discovered, and there is a reasonable certainty about earnings or there's a safety. So there's a huge liquidity which is chasing Indian stocks and the foreign money that wants to get invested in India on one hand. And at the same time, most of the investors are very cautious and they want to be with ultra safe names. That is one. But secondly, I think the reason why this is happening is we did a study on this. ETF money, which is the passive money, has become very large. So, to take an illustration, no fund manager may take a call to say invest in State Bank of India for that matter, and still $10 billion of money may get invested in State Bank of India. Now, so how does this happen? I'm not saying, I'm just taking State Bank of India as an example, not that, or any stock for that matter, any say, a stock X. Because if it's a large stock and is part of big indices, so the money gets invested in those indices and gets pro rata allocated, to all those stocks regardless of what the valuations are. So supposing somebody sitting in a foreign country finds, no value in say, HDFC Bank or Kotak Bank, but he goes and invests in India index, and those will get invested in large names, which will include HDFC and Kotak for that matter. So that is one phenomena that is impacting the flow of valuations, because there's money which is chasing India, and people are not comfortable with certain valuations of larger stocks. Having said that, there is some active money also, which basically, despite high valuations, they are convinced about growth potential and they are convinced about India's story, and they are willing to take that risk that, okay, if earnings momentum continues, I may be paying a higher price now, but if I hold it long enough, then valuations will correct automatically because earnings will catch up. So, that is the second school of thought or theme that works. And other than that, I think, as markets, as the rally sustains for a longer time, it will broaden, and, investors will start looking at stocks beyond top 10 names also.
Nirmal, what is the mood of foreign investors, the ones which are attending the conference, or even the ones, some of your partners you are interacting with periodically, regarding India, especially with a lot of negative headlines on the macro front? The data shows that they've been increasing stakes in, say, top 100, 150 companies consistently, even through the correction last couple of months. And this is the fifth or sixth straight month of net buying from the FI community. In the face of this kind of a data, what's the mood check or the sentiment check which you are gathering from your conference or your interactions with the FI community of fund managers?
Now, mood, if I can summarize in 2 words, I mean, of course, the pun intended, is finding alpha. So everybody has money, and there are a lot of liquidity, global liquidity, which can get into India. And only thing is that they are trying to find alpha, and they are trying to find stocks that will outperform the benchmark indices, so that as a fund manager, they can perform well.
So are you saying that the probability is quite high from here on that the incremental money will actually start flowing towards the broader end of the market, where quality stocks offer chance on valuations and the earnings trajectory is good, but till now, for some reason or the other, for the last 1.5 years or so, it was also avoided with the rest of the broader market?
It's a little difficult question to answer, because there are different pools of money. So as I said, there's a passive money. They will get invested in the stock indices where larger stocks will get higher proportion of it. And the passive money can also come into different types of indices, which can be a broader index or a narrow index and things like that. So one is the passive money, which I think a larger component of that will go to large stocks still. So it's very difficult to figure out that when foreign investors, how much money will they put in passive indices tracking India, or active funds investing in India. And then there's a pool of money which actively seeks ideas and alpha. That's where you'll see that they try and look for stocks beyond top 10 or 12 names, and look at long-term, creating value and alpha for their investors. So there's both pool of money, and I think you just can't say that the larger caps will start underperforming or outperforming. But of course, you'll see a lot of traction in names beyond top 10, 12 in this year, in 2020.
Nirmal, let's shift focus and talk a little bit about macro and how market is looking from the macro viewpoint. You've seen cycles been in the market for about 3 decades now. Where does Indian market lie right now in the face of either call it economic recovery, which one section of the market is calling, or economic doldrums? Do you think market is already factoring in a recovery which lies ahead and that's why running ahead, or do you think slight positivity is getting built in before the actual numbers start improving? Where do you see that?
Right. So market has rallied primarily because for two reasons. One is liquidity has been there in the global system and the global economy and global financial markets. China is not able to absorb much capital now, given when the economy was slowing down even before the coronavirus, and now there are more concern about how long and how this will ultimately play out. Two, I think most investors, they have seen India just like you and me for last 30 years. They know that this is cyclical. Given India's strong demographics, it's just a matter of time that economy will bounce back. So they are long-term investors. And three, regardless of the market, regardless of the economy, whenever a market is large, you'll always find values. You'll always find sectors and stocks that can do well, and sectors and stocks that are a little undervalued. So these are the factors that have been driving the market. Now, in terms of economic recovery, I'm personally very optimistic and very bullish that the economy will recover very soon, and it may surprise people in terms of how quickly the recovery can be. Most people today, many investors, many analysts are very cautious because they come out of a long dark tunnel. In terms of in Indian environment, even 1 year, 2 years becomes a long tunnel kind of a thing. And when you come out of a long dark tunnel, it's very difficult for you to see the glimmer of light. But you look at few macro, the large variables. Ignore what government is doing. Everything else about demonetization or GST, keep them aside. Last 70 years, whenever crude oil prices have been low, monsoon has been good, Indian economy has done well, regardless of which government was in power. And I think with the China, whatever is happening in China, we'll see a slowdown in demand from China, and that will basically drive the commodity prices, particularly the crude oil prices, lower. India's advantage in this kind of environment is that India is a net importer of commodities, in particular crude, and also other commodities as well. So whenever commodity prices soften, then India benefits, and that is one factor. Two, if you look at the reports from various parts of the country, Rabi crop is very good, and touch wood, it will be, as harvesting will start soon, and you'll see that the rural demand will pick up with that. So these two are big factors from a macro point of view. Three, government has taken many steps. Whether we give credit to the government or not, because people look at the performance and say, they try to blame everything to the government or the policy makers. But I think they have taken a number of steps. So maybe you can say that they fired many arrows, and some of them may be strong ones, some of them may be weak ones. But one thing what people are missing out, there are all these policy measures and reforms that government does and the steps that they take, they will have an impact after a time lag. Because economy is not something where you touch it and overnight it will change. We are talking about 1 billion plus people, their sentiment and the way, and also the investment to generate returns. So these things do take some time, and I think one should be optimistic about it. Things will recover, and they'll recover very quickly.
Nirmal, you spoke about liquidity. I remember talking with you about a year back when liquidity situation in this system was indeed very tight. Most of the NBFCs and lenders were also grappling, arranging liquidity and changing the kind of the composition of their own sourcing of liquidity. You have one of their businesses under your group which is directly into lending. Tell us how things stand right now. Have situation improved? On the credit cost front, how are things looking? Have they eased or remained the same? And also, how is the demand situation on ground of your lending business?
I think things have improved significantly, and all the steps that government and RBI have taken, they have resulted in averting a full-blown crisis or a much worse impact on the economic growth as well. So they eased many options for liquidity, as well as public sector banks in particular have been very supportive, and they have stepped, they come forward, and this is where the distinction between public and private sector banks become a bit relevant. They step forward, and they basically extended a supportive and a lending a hand to the sector by being very aggressive and active in buying assets at good terms, and also offering giving term loans. So I think things have improved. Also, government eased the guidelines for external commercial borrowing some time back, and many NBFCs have been able to take advantage of that. The NBFCs that have tapped the international market repeatedly, and even IIFL is tapping the market today as we speak. Our MT and medium-term note, the dollar bond issue is open, and so most larger established NBFCs are able to now tap overseas market and take advantage of global benign liquidity. And also, as I said, National Housing Bank has been very, very supportive. They have been refinancing, encouraging, and being sort of trying to also help and guide you on how to build your housing finance business. RBI's policies also have helped NBFC sector. Last week, they came with further easing of and allowing real estate loans to be restructured or given a moratorium if the commercial project is delayed for things beyond your control for a year. All these steps are very good, very positive. They are showing impact, and they have shown impact till now. Otherwise, what happens that in an interconnected world, it's like in a cascade where if something goes down, like what happened to ILFS and after that DHFL, that can impact the entire, that could have actually become a systemic crisis, the way it happened in 1998, when there are a series of defaults and then everybody goes, it becomes a chain impact. So I think we have seen that this time the negative impact was contained and not allowed to spread. This is primarily because of RBI and government taking steps in time. And now as we speak, things are easing even further, and most NBFCs will see that the loan growth is also coming back. And also, but positive fallout of this crisis has been that banks, particularly PSU banks again, are now partnering with NBFCs in a longer term, in a more constructive way. And government and RBI both seem to have understood and appreciated that the last mile underserved segment credit delivery, NBFCs can play a very, very important and a crucial role, which is in line with public policy and also in line with the overall objectives of the government for inclusive economic growth. So I think now we'll see that there are long-term constructive partnerships, and the sector will emerge much stronger and healthier.
How are things panning out as far as your wealth business is concerned? Surely you guys have done some really great job in the last 10 years, but as we stand now, where's the tilt of the affluent investors, the HNI investors? Is there appetite towards broader market participation, or are they finding comfort in the debt side? What's the sentiment like in the wealth business, where you guys deal with some of the top-notch family offices and HNIs across the country?
So, it's very good that you asked this question. So whatever efforts we have put in for last 10 years, the hard work of being customer-centric and looking at things from, so there are many wealth management firms, they may be product-centric or they may be revenue-centric, but customer centricity may become a cliche, but it's very difficult to practice. And that is what has been recognized. So just yesterday, Euromoney, which is a very prestigious awards in this category of private banking and wealth management, maybe first time ever at least in India for sure we know, or in the history of any country, Euromoney, all 16 categories awards IIFL Wealth has won. So today I think we have run a newspaper ad also, which you can see that, and these are all based on peer ratings. And obviously this is exceptional that each and every category in 16 categories of wealth management and private banking in India, the winner is IIFL Wealth. So that is something which we are extremely proud of. And at the same time, we do understand our responsibility and our task ahead that we have to come up and live up to these expectations of our supporters, our clients, and maybe the entire industry for that matter. So this business has a tremendous, runway ahead. We $25-30 billion of wealth that we manage for a country of almost nearing $3 trillion now is very, very small. And I think as India grows, we will see that a lot more wealth is created, and a lot more wealth comes under formal advisory and management. We have done many pioneering work in this. So we have, maybe again, we have been the first or leader to unbundle the advisory from transaction execution and distribution. And our IFL1 product, which just charges the advisory fee in a very transparent manner and no other charges, has been very well received. And I think the response from clients has been very overwhelming. So I think this business has a long path ahead in terms of growth and also doing innovative things for our clients.
Nirmal, I would like to end the show by asking you. You're a corporate yourself, and your friends in the corporate sector, some of the clients which you are hosting at the conference. How much confidence do you have right now in the economy, in your various businesses put together, to chart out a next 2 to 3 year kind of a roadmap from your vantage point as a corporate and the feedback you're gathering from your friends in corporate India?
So, okay, I think this is a bit mixed because a few sectors and few corporates have a bit of exuberance and they are seeing the positive traction coming. And there are few sectors that are still, maybe still waiting for a proper recovery to happen. So, what we see is that, services or, telecom, pharma, technology, and the new economy sector. So we had quite a few speakers from, as I said, that whether it's Book My Show or Delivery and many other promoters. So I think what we are seeing because of the technology and digital revolution that is happening world around, and also the way the entire global order is getting rejigged. So there are pockets of an optimism and there are pockets of caution. Both are there at this point in time. But as we, what we are seeing is that more and more people are moving to the positive camp.
Right, Nirmal. On that positive note, we'll let you go. Thanks very much for joining us on the show today, and have a great conference there with your institutional team. That was Nirmal Jain, Chairman of IFL Group, talked to us from the sideline of their conference. Key takeaways: clearly, the broader market is actually witnessing a lot of investor interest both from the FI and the DI side, and this polarized nature of the market may not continue for a long time. However, much recovery the market may be pricing in right now, the road to recovery will be patchy and may not be very in a straight line, but will be very gradual. On that note, we'll thank out of this special show which we had for you with the market masters. Thanks very much for watching.